Welcome, everyone. In today's webinar, we're going to talk about how to be a successful first-time homebuyer. My name is Marc Bautis, and I'm today's instructor. I'm the founder and owner of a financial fiduciary advising firm located in Montclair, New Jersey. Before we dive in, I'd like to share a few key points. As I often do with these presentations, I'd like to invite you to a complimentary one-on-one meeting at a later date. During that meeting, we'll assess your home buying readiness and look at your path forward. We can discuss that following today's presentation. Now let's begin. Navigating the current housing market is no simple task. Complexities abound, especially for newcomers to real estate. Recognizing the obstacles is the first step. Today, I wanted to equip you with the knowledge and tools to confidently tackle that process. Let's discuss some of the hurdles you're going to encounter. Competition is fierce out there. There are bidding wars on houses that already start at high prices. There are all cash buyers often participating in those wars. Housing stock is low overall, and there's an even limited number of starter homes available. Interest rates are higher than they've been recently. Once we get into the home, we often find that we underestimated ownership cost or we're inadequately prepared financially for being a homeowner. And that's just the tip of the iceberg. The mortgage process can be overwhelming, especially when you're trying to make sure you're adequately weighed the benefits of buying or renting, partnering with family, or whether to dig into your retirement accounts, if you have them. Buying your first home seems more complicated than ever, but you'll soon see that by understanding the full process, you can achieve homeownership, which brings us to our first insight. Insight number one, a sound financial plan that prioritizes savings, debt, and lifestyle can make homeownership achievable in today's challenging market. An honest look at your current financial situation will start to reveal what you can realistically afford for your home. Whenever we create a financial plan for someone, the first thing we do is put together their balance sheet, listing assets and liabilities that they currently have. Next, we'll look at cash flow, and that's what money is coming in through income and where is it going. Next, we'll address the home buying budget. You want to look at your home purchase through a couple of different areas. First is how much is it going to cost to purchase? And this is typically known as your down payment. But it also includes the closing costs, any upfront repairs or improvement that you need to do that are absolutely necessary. Then there's the monthly cost of owning them. This includes your monthly amount that goes towards principal, interest, taxes, and insurance. You also have to include monthly maintenance and repairs cost. A lot of people forget about thinking about this, especially if you've come from renting a home and you didn't have to worry about it. The idea of a down payment can seem daunting. It's a one-time payment to show the bank you're serious, and most of it ends up being equity in the home when you first buy it. It can be anywhere from 5 to 25% or 20% of the purchase price. It can go as low as 3.5% with loan assistance. So we're going to figure out how much you'll get there in 3 steps, and this will involve a few calculations. The days of no money down purchases are almost gone. 20% is the typical down payment, but like I said, you may be able to put as little as 3.5% to 5% down, depending upon your lending program. If you don't have the funds necessary for the down payment, you want to figure out a saving strategy where you'll be able to have those funds available. So you'll calculate, okay, I need this much for the down payment. I have this much, therefore the gap is what you have to solve for, X. And then depending upon how much you're able to save per month, that will determine how long it will take you to have that down payment readily available. The next question is, how much of a mortgage will you qualify for? The main ratio or the main calculation that's used here is the debt to income ratio. So what this is, it's a crucial metric that lenders use to assess your borrowing capability. It's a measure of your income to the amount of monthly debt you carry. So if we just look at a simple example, let's say someone takes in $5,000 a month of monthly income, and they have $1,500 in monthly debt. So that would equal a 30% debt to income ratio. A low DTI, or debt to income ratio, makes you more attractive as a borrower to the lender. A high DTI means you're more of a risk to the lender. So many lenders want you to have a DTI of 36% or less, with no more than 28 to 35% of your income going towards your mortgage. Now you may be thinking, okay, this seems a lot. Will my real estate agent help me with all these tasks? The quick answer is they'll help you with a lot of them, and they're a crucial member to your team, But it brings us to our second insight, which is the professionals guiding your home buying journey. They have distinct roles, loyalties, and motivations, and understanding all these are crucial. So let's talk about the team members. Okay, first is, like we mentioned, your real estate agent. And these are your guides to helping you get your home. But you also may have heard that there's a lot of big news going on about rules for real estate agents that go into effect in the summer of 2024 for the majority of U.S. agents. So these new rule changes may result in end to certain policies that govern agent commissions. In the past, the seller's agent received a commission from the home sale price and shared part of it with the buyer's agent. So you, the buyer, didn't pay your agent directly. The commissions were built into the home price. Now, for most agents, that may no longer be the case. What it likely mean for you is buyers will save money in the end, and you'll end up with more control over what you pay and what services you get from your agent. You'll also get to negotiate the commission directly with the agent, which may add another level of complexity to the process. So we don't really know how this will play out across all U.S. real estate agents, but the majority will adopt the new rules this summer, and we'll keep updated on any developments. Okay, next up is the mortgage lender. So the mortgage lender assesses your finances and will help you identify different loan options and guide you through the application process. Next up, you have your insurance agent. You need to protect the property, and mortgage lenders will require that you carry homeowners insurance, but even if you didn't have a mortgage, it's definitely a good idea to have. It protects your interest, it protects the bank's interest, and there are different factors that can affect the policy cost. Like, for example, if your roof is old, or if you have a swimming pool, or if you live proximity to the water and you may require flood insurance. Next up, as part of the home purchase, you want to have a good home inspector. So what the home inspector does is they'll do a thorough analysis of the home, and they'll recommend necessary repairs, modifications, hopefully saving you a lot of headaches later. Even if the home inspector doesn't see any sign of pests, it makes sense to pay a nominal fee, get the pest inspection, because depending upon where you live, pest inspections are necessary or mandatory, but even if they're not, it's a good idea to get done. Okay, now you have your real estate attorney. So what they do is they ensure all legal and financial conditions are met before the property and the funds change hands. They attend and represent your interest during the closing. To talk about that, the closing is the final step in the transaction where the ownership is legally transferred from the buyer to the seller. So lots of documents to sign, financials are settled, and you'll get the keys to the new home. All right, so here are all the major milestones along the way with the professionals that'll be there to help you. So if you want a copy of this, I'd be happy to get that over to you. Okay, now you might be saying to yourself, this all makes sense, but it sounds a little bit overwhelming, which can take us to our third and final insight for today. What you need, in addition to the financial plan, in addition to a great team, you need a comprehensive home ownership plan. That'll help boost your confidence, it'll steady emotions, and it'll enable smart decisions. Home buying, people have done research on, and it's the #1 stressful experience that people go through. So you want to make this as smooth as possible for now as you're purchasing the home, but also going forward so that you understand what you're really getting into as a homeowner and that you're properly prepared for it. So part of the home buying process will be to track, monitor, evaluate, and refine. And that goes into just anything you do that someone does financially, right? Things never stay the same. Prices may change. Things may come up during the closing process. So you want to be on top of that, and you want to be ready to adjust and adapt to any kind of changing conditions. So I think one thing that gets lost is that people don't consider the true costs that come with home ownership, right? You have your property taxes, you have your homeowner's insurance, it could potentially have any HOA fees. There's your mortgage insurance, depending upon what your initial loan amount was. There are moving costs that potentially could be there. There could be repairs, maintenance now that you have to do up front, or some that are planned, or that you want to do over a sliding schedule. You want to account for things like landscaping, pest control, seasonal maintenance costs, and these things can add up. Whereas a lot of people think of that PITI, which is the principal, interest, taxes, and insurance, when you need to also factor in all these additional potential costs that can be there. So before we move on, I talked a little about changing plans. You have to remember that life happens. To buy a home, you may have to do things to your finances that you didn't intend to. An example of this would be pause savings or pause contributions to a 401k plan. And if you can look at, or go through your projections or your analysis, and in the short term, it may be fine to do as long as you have a plan on how, let's say you do pause your savings, how you can catch up over time. So there is something like a savings catch-up plan that you could put aside where okay, you pause for a certain amount of time, but then you catch up later, over a longer period and get back on track to whatever goal you were saving for. You may want to reevaluate your budget, identify areas where you can reduce expenses. That's going back to what's the monthly cost of homeownership, and do you bring in enough income to basically afford the home? So you also may want to adjust your timeline, right? Some people may say, okay, I want to buy my home now, but the reality is maybe it makes sense to buy in a year or 6 months or 2 years if you can put yourself in a better financial situation over that period of time. All right, so we're getting close to finishing. So let's review the 3 insights that we talked about. And these, they're the critical steps to understanding or to having the most success during your home buying process. So first is you want to understand your financial picture. Second, you want to make sure you have a solid team together that has your interests in upfront and prioritized. And then you also want to have a home ownership plan, which is different than your overall financial plan. So, there's a lot of uncertainty around home ownership. I mentioned it's the number one stressful thing that people go through. 95% of prospective home buyers, they face barriers to owning. It's never the smoothest process. 42% feel they lack support or advice and don't know where to start. But most people, 88%, agree that the journey, complex as it is, it was worthwhile buying that home. So if it's right for you, I'm here to help you prepare your financials for the next milestone in the process and really kind of help you financially guide through. As I mentioned in the beginning, I offer a complimentary one-to-one meeting to address any questions, concerns that you have. And what we do is we use a detailed checklist to help see where you are in the home buying process and determine what your next steps may be. And a lot of this we talked about was first-time home buyers, but really anyone going through buying any home should really have these plans in place. So thank you for joining us today. We have all our previous webinars located on our Learning Center that you can get to at bautisfinancial.com/learning center, and then as well as the schedules for any upcoming ones. I invite you to schedule that complimentary consultation with our team of financial advisors. You can do that at bautisfinancial.com/call. And if you're watching a replay of the webinar, there'll also be a button to click on our website and in the YouTube description. Our team would be happy to discuss your unique circumstances and situation, and assess where you are in the process.